Hi, from this video, we are discussing about the 2021 A-level past paper, first paper, question number 1 to 15. So first one, which of the following statement best describe the primary purpose of accounting in a firm? So when you are answering that, මේ ඔක්කොම දීලා තියෙන මේ answers නිකන් අපිට answers විදියට අපිට නිකන් argue කරලා ගන්න පුළුවන්. But they are asking the best describe of the primary purpose of the accounting in the firm නේ. ඒතකොට primary purpose එක හැම වෙලේම ඔයගොල්ලන්ට teachers guide එකේ අරවා මේ වගේ හැම දෙයකම කියලා. ඒතකොට අර ඒ primary purpose එක හොඳටම කියන මේ answer එක තමයි ඔයගොල්ලෝ යන්නේ. So your answer should be providing the financial and non-financial information for the decision making of stakeholders. Answer number 5. Second one, which of the following accounting concepts provides the basis for the classification of the portion of a long-term loan payable within 12 months from the date of statement of financial position as the current liabilities? So the concept that based for the distributing, classifying assets and liabilities into current and non-current is going concern concepts. So the answer should be third answer. මේ කන්සෙප්ට්ස් වල මේ මතක තියාගන්න එකම ඉම්ප්ලිකේෂන්ස් ටික තමයි එන්නේ. දැන් පාස් පේපර්ස් ටික බලන් එනකොට එකම ඉම්ප්ලිකේෂන්ස් ටික තමයි එන්නේ. ඒක නිසා ඒක පොඩ්ඩක් go through කළාම because there are maximum two questions in MCQ from the concepts as well as one question from the writing the short answers. So altogether there are three questions from the concepts. ඉතින් අපරාධනේ ලකුණු තුන නැති කරගන්න එපා. Third one, the estimated useful life of a machine owned by a firm is revised from 10 years to 8 years, and the depreciation calculated on this revision has been recognized in the financial statement. So the depreciation is an expense. So when you are identifying the depreciation, so the expenses according to your year income is the concept that based for that is matching concept. So the correct answer should be number 2, matching concept. So we have to answer question number 4 to 6 from these details. So fourth one, which of the following accounting equations reflect the net effect of these transactions as at 31st March 2021? First, you purchase 500,000 office equipment on credit. So your assets increase by 500,000 and it's a liability increase because you purchase these office equipments on credit. And the company paid 20,000 in cash for the installation. So it's an we consider that as capital expenditure. The installations that you are paying for initial recognition, the proper plant and equipment, so that amount you should add to the proper plant and equipment. So again, assessed increased 23 and assessed again decreased by 20 because you are paying in cash. And the last one, you are paying the first installment 60,000. So cash decreased 60,000, mean assets decreased 60,000. And that includes 10,000 interest. So the equity minus 10,000 interest and the liabilities should minus by 50. So your assets closing balance should be 440, liabilities should be 450 and the equity should be minus 10. So the correct answer for question number 4 is number 4. And here they are asking what is the correct double entry to record the first loan installment paid on 31st March 2021. The correct answer should be office equipment loan debit 50, interest expense debit 10, and the cash credit 60. Because you are paying the total installment 60 in cash. So when you are paying cash, so cash account should be credit. But that 60,000 include interest 10. So that interest is an expense. So the interest expense account debit. So you are paying total installment 60 and that includes 10 interest. So the other amount 50 is the amount that you are paying for the loan. So that's why the loan is debiting office equivalent loan 50. Okay. And they're asking the source documents and the prime entry books used to record the cost of the office. So remember here you are purchasing the office equipment 500,000 on credit. So the purchase amount you done on credit basis, but the installation charges you paid in cash. So when you are identifying the cost, 500,000 and 20,000, both you should consider. So that's why the journal voucher, because when you're purchasing the proper plant and equipment on the intention of reselling, so those you are recording in the general journal. So the prime entry for that is general journal and the source document is journal voucher. And in the other hand, you are paying this 20,000 installation on cash. So when you are paying cash, cash payment journal, and the source document for that is payment voucher. So that's why the answer for question number 6 is number 5. So again, you have to consider these details to answer question number 7 and 8. So 7, what is the gross profit for the month ending 31st Jan 2021 and the cash account balance as at 31 Jan 2021. And here the gross profit, when you are finding the gross profit, here this is the VAT registered business. So when it's given the VAT registered business and it's given the sales and purchases with 8% VAT, right? So at that point, this is a VAT registered business. So you have to exclude the VAT. VAT එක අයින් කරන්න ඕන when it's a VAT registered business, right? So sales should be 600 and the purchaser should be 500 because you are using all these goods. Here it says all these goods were sold for 648,000 on credit. And this 540 and 648 is include 8% VAT. So you have to deduct that VAT from those, right? So your sales should be 600, your purchaser should be 500, and the gross profit is 100. How do you deduct that? How do you exclude the VAT? 540 is equal to 108%. 100 is the amount, 8% is the VAT, so 100 plus 8, 108%. So 540 divided by 108 and into 100. 648 divided by 108 and into 100. So that's how you get the sales and purchases here, and then the gross profit should be 100. And the cash account is the firm, the owner is investing 100,000 in cash, so the cash account debit 100, and you are receiving debt from debtors 500, and you are paying to creditors 340. Here it says the settled creditors 360, subject to a discount of 20,000. So that means the amount that you paid for them is how much in cash? 340. So cash account closing balance should be 260. So that's how you got the answer for question number 7 is number 3. And here, from the other 8 questions, they are asking the total liabilities. So when you are finding the total liabilities, your total creditors is 540, and the creditors you paid 340, and you received from them a discount receipt 20. So creditor closing balance should be 180. And VAT collected through sales is 48 and VAT paid through purchases is 40. So the total VAT collected 48, but you paid VAT when you are doing purchases 40. So the VAT payable is 8 and the total liability should be 188, right? And they are asking the equity. So the opening equity is given the own investment 100 and the gross profit we found from here 100. And the discount received is an income, so plus 20. So your total equity should be 220. Opening equity is 100, gross profit is 100, and plus discount received is 20. So altogether, the total equity should be 220. So the correct answer for question number 8 is answer number 3. So here the 9th question, they're asking the salary expense and the EPF expense. So keep in mind, the EPF contribution from the employee is not an expense for the business point of view. The EPF contribution done by the employer, business එකෙන් කරන EPF එක විතරයි company එකේ කියන්නේ organization එක point of view එකෙන් expense එකක් වෙන්නේ. Right? So here it's given the net salary. So net salary means after deducting that 10% employee contribution. So the net salary is, in this case, net salary is equal to 90%, which means 1,800. So if you know 90% is 1,800, then you can get the gross salary. 100% is 2,000. How do you get that? 1,800 divided by 90 into 100. So your gross salary should be 2,000, right? So the salary expense should be 2,000. And EPF contribution, so that's mean they're asking the EPF expense. So as I told you earlier, EPF expense, when you are considering the EPF expense, you should consider only the 15%, which means the employer contribution to the EPF. So 2000 into 50% is 300. So question number 9 answer is number 3. So in this case, it's given the gross profit and the net profit, and they figure out the stock loss during the year is 65,000. And yeah, your closing stock you calculated based on the physical stock. So physical stock mean after deducting those stock losses නේ. ඔයා ගණන් කරන physical stock එක නේ. ඒතකොට අර stock loss එක නිසා physical stock එක මේ වැරද්දක් කියලා නේ. You correctly මේ calculated the physical stock as a closing stock. Right? So the error that they did here is they didn't record the stock loss. So the double entry of stock loss is stock loss expense debit and the cost of sales credit. So, and in this case, any transaction that affecting to the gross profit is similarly affecting to the net profit, because you are calculating the net profit after gross profit, right? So stock loss debit 65 is only affecting to the net profit. Why? Stock losses we are recording in other expenses. So that's why it's only affecting to the net profit. And the cost of sales credit when your gross profit is increased because cost of sales expense decrease mean your gross profit is increasing. So same it affecting to the net profit as well. So your correct gross profit should be 830 and your correct net profit should be 540. So the answer for question number 10 is answer number 4. So here the following information extracted blah blah blah, and here they are asking the prime cost and the total manufacturing cost. And work in progress is valued based on the total manufacturing cost. So that is the general procedure that we have to follow when you are recording the work in progress. Right? So opening raw material purchases and minus closing raw materials, direct labor cost and royalty payments. So your prime cost should be 260 and the factory overhead 35, and that is the place that you should adjust the work in progress. And here it says the increase in work in progress. So what's the meaning of increase in work in progress? So that's mean your closing inventory of the work in progress is higher than the opening inventory. So when you are adjusting the work in progress, you are adding the opening work in progress and minus the closing work in progress. So if it is the increase in the work in progress stock, so that's mean your closing inventory is higher than the opening inventory. So that change, so the difference of that, you should minus from here. So your production cost be 280. So the correct answer for question number 11 is answer number 4. So Sunima Traders does not maintain accounting books properly and the information is given, and the Sunima Traders sells goods keeping a profit margin of 20% on selling price. So that's mean if it is the selling price is 100, your gross profit is 20, right? So the information given here, sales is given, opening stock given, but we have to find out here purchases. So that's why I may write down here purchases as X. And purchase return, carriage inwards, closing stock, cost of sales, and gross profit. So this is the way of finding the gross profit, right? So this is the format of the trading account. And here we know the presentation relationship between sales, cost of sales, and gross profit. So if it is the sales is 100%, so cost of sales is 80%. So we know the sales here 1050. So 1050 is equal to 100%, which means your cost of sales is represented by the 80%. So 80% of 1050 is 840. So if you know this 840 and if you know the other cases as well, then you can find out the purchases from the reverse method. Right? So 840 plus 170 minus 40 plus 50 minus 40, then you are getting the purchases as 880. So the correct answer for question number 12 is answer number 2. 31, club accounts. The information has been provided for Sarana Welfare Association for the year ending 31st December 2020. And they are asking the subscription income recognized for the year ending 31st December 2020. So here I go with the subscription income account. And subscription receivable as at opening date, it's an asset, and opening date balance should be in debit side. And subscription received in advance as at opening date, it's a liability. So the liabilities opening balance should be in credit side. And the total subscription received during the year, you should add these three together. So the cash amount that cash received for the subscription is 1,344. So cash account debit, subscription account credit, right? And here it says the subscription receivable as at closing date 96. So the balance brought forward should be in debit side, which means the balance carried down should be in credit side. Because these are the subscription receivable as at closing date. And here it's mentioned the subscription received during the year. You received 108 for the next year. So 108 you received in cash this year, that relevant for the next year, right? So that 108 is subscription received in advance as at closing date. So it should be in balance carried down debit side. So when you are recording those all information that you know, then you can find out what is the income that you should identify to the income statement. So it should be 1,200. So the correct answer for question number 13 is answer number 2. So this is a theory question. Which of the following statements are correct as to the section 24 of the Partnership Ordinance 1890? Partners are entitled to an annual interest of 5% on loans provided by them to the partnership. That's correct. Partners are entitled to an annual interest of 5% when the amount payable on the retirement is outstanding. That's incorrect. ඒකට 5% දෙන්න ඕනි කියලා කියන්නේ 42th statement of Partnership Ordinance of 1890. ඒක 24th statement එක නෙමෙයි, ඒක 42nd statement එක. Right? See, partners are entitled to salaries when they contribute for the management. That's incorrect. Because the 24th statement එකේදී කියන්නේ partners are not entitled for the annual salaries and the interest on capitals. And the last one, partners are entitled for reimbursement when they pay an expense of the partnership from their. That's correct. So the correct answer should be A and D only. Answer number 2. So the last one of this video is given the information about the partnerships, and here the capital account opening and closing opening balances, and here it's given the closing balances. They are asking the goodwill of the partnership as on 31st March 2021. So this is the capital account I mentioned here. Opening balance of Amal and Samal 300, 200. And when the Malik joined into the partnership, he brought 500 as cash. So the capital account should be credit to Malik 500, and it's given balances as at closing date. So I write down මේ ටික වැරදි යන්නේ. මට මේ අන්තිම මේ line එක delete කරන්න තිබ්බ එකක් එක මට delete කරලා නෑ ඒක මේ මෙතන මේ balance carried down කියලා එකක් වැරදි. So here the balance carried down is given. So these are the information that we know, and now we have to find out the goodwill, right? So Malik මේක මලික්ගෙන් තමයි හොයාගන්නේ. මලික්ගේ මේ column එකේ. Malik's closing balance is 450. And but Malik brought cash to the business 500. So the closing total should be 500, but his closing balance is 450, which means 50 is deducted from Malik's capital for the goodwill, right? So goodwill you are debiting to the new ratios. Your new ratio is 3 to 1. So 50 is equal to 1 of 6. I can high එකකට තමයි මේ 50 එක 3 to 1 means 6 නේ. Yes, 6 වලින් එකකට තමයි මේ 50 එක equal වෙන්නේ. Then you can find out the total goodwill. So the total goodwill should be 300,000, right? So the correct answer for question number 15 is answer number 3. And I will upload the rest as well. Thank you. From this video, I am discussing about question number 16 to 30 in 2021 past paper, right? So here the same details that we discussed in question number 15. So from here 16, they're asking the total equity and the Amal's current account balance. So in this case, there is no any interest on capital and the partner salaries, and also there is no any drawings. So just you are distributing profit based on the opening uh, profit sharing ratio, because the new one Malik is coming rejoining to the joining to the partnership on 31st March 2021 ne. So here we have to do the appropriate, we have to appropriate the profit based on the closing, based on the previous profit ratio 3:2. So total profit is 150, 153 to Amal 90 and to Saman 60. So the Amal's current account balance is 150, and they're asking the total equity. So the total equity mean in the partnership, the equity is total of the current accounts and the total of the capital account. So the total of the current account is 260, and total balances of the capital account is here it's given the balances, so 1000. So the total equity is 1260. So the correct answer for question number 16 is answer number 5. And which of the following factors affect the change in the inventory cost per unit when you are calculating based on the weighted average cost method? So the weighted average cost method එකේදී cost එක, ඒ කියන්නේ cost per unit calculate කරද්දී effect වෙන මේ factors තමයි අන්නේ. So purchasing price it's affecting, and quantity purchased is affecting, and the cost of opening inventory is also affecting, right? But the quantity of issued is not affecting when you are finding the cost per unit, right? So the correct answer should be A, B, and D. So the correct answer for question number 17 is number 4. And here also, here the Mansrika PLC was incorporated on 1st of April 2016. The company revalued its land for the first time on 31st March 2019, and the revaluation surplus gained 500, and again land was revalued in this year, and incur result a deficit of 300,000. Further, the company revalued its office equipment on 31st March 2021 for the first time, 800,000. So they are asking the correct accounting treatment for the revaluation deficit in this year. So that's meaning 31st March 2021. So here we are reevaluating land and office equipment. Land you are reevaluating for the second time, but the office equipment you are reevaluating for the first time, right? So here the land revaluation gained a deficit 300,000, and that 300,000 and the land first time revaluation surplus is 500,000. So this second time revaluation deficit, you can't record that in other expenses because there was a revaluation surplus resulted in first time revaluation 500. So you have to written off that surplus from the current year deficit. So which means you have to written off 300 from the other comprehensive income. And another deficit is 800,000. So that 800,000 you have to record the under other expenses directly. So the correct answer should be fifth one. Recognize 800,000 in profit or loss as an expense, right? So this 800,000 should be recorded as an expense, and the 300,000 in the other comprehensive income. So that means 300,000 you should written off from the other comprehensive income. So the correct answer should be number 5. 19. In which of the following situations provisions is recognized in the financial statement company as per LKS 37? Provisions, contingent liabilities, and contingent assets. They are asking the provisions. Provision එකක් විදිහට recognize කරන්නේ මොනවද කියන එක. Sale of goods with 1 year warranty, yes, it's a probable outflow. So it's a 1 year warranty, and so that means it's a provision. Depreciation is not a provision. Depreciation, in one hand, depreciation is an expense. In the other hand, the accumulated depreciation is the asset account, asset minus account. So that's not a provision. Undertaken to repair the defective goods sold as per the past practice. So it's also a provision. So the correct answer should be A and C. Which of the following situations can be considered as change in accounting policies as per case 8? So here, change in the depreciation method from straight line method to reducing balance method, yes. It's the No, they are asking the change in accounting policies. Sorry, my mistake. They are not asking the change in accounting estimates. They are asking the change in accounting policies. So the depreciation method change is not an change in accounting policies. It's the change in accounting estimates. So the first answer is incorrect. B, change the cost formula. Yes. So the cost formula change is the accounting policy change now. So that is an answer. And changing the measurement base of the class of power plant and equipment from cost model to revaluation model, it's also policy change. So the answer should be B and C, number 4. 21, Roshan PLC entered blah blah blah, and they are asking the depreciation of this motor vehicle for the year ending 31st March 2021. They entered to the lease agreement on 1st of April, and the initial payment they paid 1,500 as down payment. And the initial lease liability is 3,500. So altogether, the total cost of this motor vehicle is 5 million. So it's simple. It's given the useful life is 5 years. So divided by 5 years, your depreciation is 1,000. So the correct answer for question number 21 is number 4. Here it's a bit case. They're asking question number 22, question number 23 from these cases. So in 22, sorry, question number 22, they're asking the profit and the total company income and the return earnings and the equity. මම මේ ඔක්කොම එකට තමයි මේක දාලා තියෙන්නේ. So here the opening date, ordinary share capital and the return earnings is given 8 million and 2 million. And the total income and expenses recognized for the year ending 3 million and 1,800. And the total expenses recognized for the year include a deficit of 600 result from the revaluation of machinery. That's okay, but this is the revaluation of machinery for the second time. If it is the first time revaluation deficit, yes, you can record that as an expense. So that's meaning the other expenses. But here, it's a result from the second time revaluation. And the revaluation of this machinery for the first time is 400,000. So the last time revaluation surplus you should written off from the current year revaluation deficit. So that you should record under other comprehensive income here. So the surplus written off you have to record here, and because they recorded the total devaluation deficit in the total expenses, and so you have to written off, you have to deduct the surplus written off from total expenses. So that's how you got the profit here, 1,600. So the total expenses included total deficit 600, but that's from that 600 you are written off the last year's surplus. So the last year's surplus written off you have to record under other comprehensive income here, 400. Right? So your total company income is 1,200. So the correct answer for question number 22 is answer number 4. Profit for the year is 1,600 and the total company's income is 1,200. And they're asking the return earnings. So the opening return earnings is given as 2 million. So the profit is here you found from here 1,600, and they paid interim dividend 500. Keep in mind the final dividend proposal we do not record in books. It's just a declaration from the note, but you paid for the interim dividend 500. So that payment for the dividend you should deduct from the return earnings, and then you are finding the return earnings at closing 3,100,000. And the stated capital opening date 8 million, and the opening date, sorry, the closing return earnings is 3,000. So altogether closing equity is 11,100. So the correct answer for question number 23 is answer number 3. And here, question number 24 and 25, you have to ask from, you have to answer from these informations. So 24 earnings per share, they're asking earnings per share. So you have to get the profit after tax divided by number of shares. So how I find the number of shares here? The stated capital total is 10 million and share per share value is 20. So 10 million divided by 20, then you are getting the number of shares. So your number of shares is 500,000. And here the profit before tax is 1,080,000. From that you have to minus the income tax for the year 80. So your profit after tax is 1 million. So 1 million you should distribute by 500,000 number of shares. So the earnings per share is 2. And dividend per share, you have to get the distributed dividends. So here the dividends paid to the shareholders 300,000, and it should may divided by the number of shares, so 0.6. So the correct answer for question number 24 is answer number 3. Return earnings, sorry, they are asking return on equity for question number 25. So profit divided by equity into 100%. So your profit here, profit after tax. Keep in mind you have to get the profit after tax when you are finding the return on equity. So the profit is 1 million and your equity should be here the total of stated capital and the return earnings 10,700,000, and you are getting the 9.35%. So return on equity and the interest coverage ratio, again profit after tax plus interest plus tax divided by interest. So profit after tax is 1000, interest is 160 plus tax 80. Altogether, you have to divide by 160. So your interest coverage ratio is 7.75. The correct answer is number 3. 26. Which of the following statements is or are correct in the relation to the classification of cost? Here, all direct costs are variable cost. All direct costs are variable cost. No. Direct cost like and prime cost and direct cost mostly direct labor, direct royalties, and direct materials are we consider as the variable cost. But let us know the raw material carriage inwards. So raw material carriage inwards we consider as a direct cost, but it's fixed, right? So we can't get the all direct cost are variable cost here. That's incorrect. All indirect cost are fixed cost. That's also indirect. Indirect cost are variable cost. Let us assume that the sales commission per unit. So those are the variable costs. It's indirect and it's variable. See, all overheads are indirect cost. That also all overheads are yes, that's correct. Overheads so indirect we can similar terms. So like high and the D all direct cost are product cost. That's also correct. So the correct answer for question number 26 is answer number 4. 27, they're asking the maximum stock level. So here you have to memorize the how to find the minimum stock level, maximum stock level, reorder level, those things. Equation you can't do this. So the reorder level is given 2 million. So 2,000 kilograms, and the reorder quantity given 5,000 kilograms, and the minimum consumption and minimum lead time is given directly 200 into 3, so 6,400. And correct answer for question number 27 is answer number 4. 28, they are asking the correct sequential order of these steps. So the correct sequential order is first you have to collection of overheads. You have to collect the overheads to distribute, and then your allocation of overheads, and then apportionment of overheads, and finally you have to absorption of overheads. So that's the sequential order of identification the production overheads, right? So the correct answer is number 4 for question 28. 29, the break-even point of the company is 6,000 units. Selling price is given and the total fixed cost is given. So they ask you the variable cost per unit. So break-even point in units you are finding from fixed cost divided by the contribution. So the contribution is you are getting from how? Selling price minus variable cost. So we know the fixed cost here, we know the selling price here, and we know the fixed break-even point at units. So 6,000 is equal to 480,000 divided by 200 minus VC. So VC means the variable cost per unit. So that's the thing that we have to find out. The equation VC is equal to 120. So profit, how do you get the profit? Total contribution minus total fixed cost. So the total contribution here, the contribution we found here 80. So 80 into 8,000, 160,000. Sorry. 80 into 8,000 minus 480,000. Then you are getting the profit 160,000. So the correct answer for question number 29 is answer number 3. And the last one in this video, they're asking the payback period, and it's given the profit after tax in each year. So when you're finding the payback period, you have to get the cash flow first. And the difference of the cash flow and the profit is the depreciation. So here, that's why I added the depreciation to the each profit after tax, right? So how do we find the depreciation here? The purchase price of this new machine is 3 million and its expected useful life and the residual value is 500. So 3 million minus 500, you are getting the depreciable amount 2500, and that depreciable amount you have to divided by 5 years. So so the depreciation for the year is 500. And to get the cash flow, you have to add depreciation to the profit after tax. Then you are getting the cash flow. And now, after you found the cash flow, then you can find out the payback period of this project. So the initial outflow is 3 million. First year you are getting 750. So that means another 2,250,000 you need. And in the second year you are again receiving 1,250,000 and another 1,000 you need. And in the third year, you are receiving almost 1,000. So the payback period for this project is 3 years. So the correct answer for question number 30 is answer number 2. So that's how your answer. That's the discussion of the past paper 2021 from question number 15 to 30. And keep in touch. I will upload the other videos as well. Thank you. 31, they are asking to state whether true and false in following statements. A. Every business carried out with a profit motive must prepare financial statements based on accounting standards. That's incorrect. That's a false statement, because partnerships and sole proprietorships, they are not bound in a rule to do their accounts based on accounting concepts, right? Accounting standards. So that's false. B. General purpose financial statements are prepared primarily focusing on the information needs of the fund providers of a business. That's correct. The content of the financial reports of the business could change in response to the changes. Yes, it's correct. The identification of transaction is the initial step. Yes, in the accounting process, you have to identify transaction through source documents. That is your first step in accounting process. So that's a true statement. 32, they are asking the following transaction, how that impact to the equity in the accounting equation. In the accounting equation. So purchases of, and this business is coconut oil manufacturing business, right? So A, purchase of coconuts on credit. So normally purchases we consider that as an expense, but in this case they are asking the impact on equity in the accounting equation. The purchases of coconuts on credit, the double entry is stocks increase. So stocks increase by that amount and the creditors increase by that amount. So that's not impact on the equity. Sale of coconut oil on credit with the profit. So that profit margin, from the profit margin, your equity is increasing. Payment of cash to coconut suppliers subjected to a discount. So that means you are receiving a discount from your creditors. That is an income. So your equity is increasing. Obtaining coconut oil by the owner for the personal use, that is decrease. That is drawing. So when the drawings happens, your equity is decreasing, right? 33, they are asking the transactions, the primary books that are relevant for these transactions. Purchase of paddy from farmers on cash payments. Purchase of a rice processing machine on credit, general journal, because here you are purchasing a processing machine on credit. You are purchasing property, plant and equipment on credit. So that goes to the general journal. Sale of rice to wholesale traders on credit, sales journal, and the sale of broken rice for animal food also on credit now, sales journal, right? 24, the debtors control account balance of the business and given 560 and blah blah. And they're asking the total balances of debtors ledgers before correcting the above errors and the revised balance of debtor control account after correcting the above errors. So here it's given the control account balance. So we can do first the revised control account. So your control account given balance is 560,000. That is opening debit balance. And the debtor balance of 20,000 written off as bad debts. So it is an expense. So debtors control account credit bad debts 20,000. And sales invoice 42,000 has been recorded as 24,000 in the sales journal. But this correctly recorded in the debtors ledger. So that is only affecting to the debtor control account, right? So the difference is 18,000. So that 18,000 you should debit to the debtors control account, right? So your correct debtor control account balance is 558. And these two transactions, these two errors are only affecting to the debtor control account. That is not affected to the debtors ledger, right? So which means debtor control account correct balance is also your debtors ledgers balance, because these errors are not affecting to the debtors ledger. So which means in this case your debtors ledger there is nothing wrong over there, right? So debtor control account correct balance is also equal to the debtors ledgers balance. So both answers should be 558,000. 35, they are asking to identify the accounting concerns applicable to each position. So A, entity concern, because we name companies name apart from the owners, and this is periodicity concept, and this is money measurement concept, and this is matching concept, because the expense you are deducting from sales, right? So that is concepts. 36, they are asking to state whether true or false in following statements. The profit of the business could be distributed as cash drawings. That's correct, can be in the sole proprietorship. Goods sold to owner are accounted as sale of the business. Yes, we can, because here again the business entity concept applies. The business and the owners are the two different things. So if the business is sold some stock to the owner, so we consider that as also sales, right? The donation of goods should be recognized as an expense of the business, true. An income statement is not required to prepare when transactions are recorded on cash basis. That's incorrect. We have to prepare income statement to find out profit or loss, right? Okay. 37. They're asking the sales revenue, and they're asking the value of inventory reported in the statement of financial position as at closing date. So here, beyond the trader, so sole proprietorship sells goods on sale or return basis. So unsold goods are required to return within period of 30 days. Right? On 15th March 2021, they sent 500,000 worth of stocks to the agent. The selling price of these goods are 700,000. The agent was able to sell only 60% of these goods as at closing date. The net realizable value of the inventory with the agent as at 31st March 2021 was 210,000. So they are asking the sales revenue that you have to identify in your books. So you sold only 60% of goods. So which means the total sales value of that 500,000 worth stocks are 700,000. So your sales revenue is 700 into 60%. So which means 420,000. And they ask in the cost of the closing stock. So cost of the sent stock is 500. From that 500, you sold 60%. So which means you unsold 40%. So 500 into 40%, your cost of the closing stock is 200. And the NRV given as a closing date 210,000. So comparing cost and the NRV, you have to record the lower value in your financial position. So which means you have to record inventories in SFP for the cost, because NRV is high in this case, 210, right? And 38 and 39 is given about a partnership business. Manjula and Sanjula carried out a partnership, sharing profit and losses equally. And Anjula was admitted as a new partner on opening date, and he bought both capital and share of goodwill on this date. The goodwill of the business was estimated as 1 million. The goodwill of the business is adjusted through partners' capital account as in the normal way. The profit or loss sharing among Manjula, Sanjula, and Anjula was agreed as 532 respectively, and additional information is given below. And here, the capital balances as at 1st of April 2022 given after the goodwill adjustments. So, which means these balances are given after the goodwill adjustment. And for the year ending, share of profit and partner salaries is also given, right? So, they are asking to identify the cash bought by Angela and the profit of the partnership for the year ending and write the journal entries to record the total profit appropriated to Manjula and salary appropriated to Sanjula, right? So first of all, you have to find out the cash bought by Anjula. So you have to prepare the capital account. So capital account closing balances is given before, sorry, closing balances is given after adjusting the goodwill. So this is 5,000. Here it's given. So Manjula 5,000, Sanjula 3,200, and Anjula 1,800, right? And the goodwill is given here 1 million, and the opening, which means the old ratio before admitting Anjula, the old ratio that Manjula and Sanjula sees equally. So goodwill is distributed equally for Manjula 500 and Sanjula 500, and the new ratio is 532. So Manjula 500, 300, and 200. So recording all these information that you already know, which mean the closing balances and the goodwill adjustments, then you can find out balance in this capital account. The cash bought by Angela is 2 million, right? And they're asking the profit of the partnership. It's very easy because from the profit, you are distributing that profit through interest on capital, partner service, and share of profit. So if they are asking the profit in the equation, sorry, they're asking the profit in a partnership. So which means the addition of share of profit, partner salaries, and if it is over there, interest on capital as well, right? But in this case, there is only share of profit and partner salaries. So which means the total profit is partner salaries and share of profit, right? And when you are distributing your profit to partners through appropriation account, so which means that appropriation account debit and partners current account credit. Okay. 40, they are asking to classify the following cash transactions as financing, investing, and operating, right? Cash received from a right issue of shares, financing, you are funding to the business, so which means financing activity. Dividends received from the investment in shares of other company. So when you are investing shares in another company, so that is an investing activity. So the returns, the profits that you are generated from the investing activities goes on the investing activities as well. So here you are investing dividends for another company, right? So that is an investing activity, and the dividend income that from that investment from that shares you have to recognize the investing activities. Settlement of the amount payable to the trade creditor that comes in operating activities, and the down payment of lease that is also comes as investing. So keep in mind when you are paying the amount, the credit portion to the lease creditor, that comes under financing activities. But when you are paying the down payment at the point of purchasing that lease property, that comes under investing activities. And the lease interest that you are paying to the lease creditor, that comes under operating activities. So in the lease transaction, there are three cash flows that can be happen. The interest that you are paying that comes under operating activities. The down payment at the initial point when you're purchasing the lease property that comes under investing activities, and the lease portion, the credit portion that you are repaying to the lease creditor that comes under investing activities. Sorry, financing activities. Okay. 41, there are Anuradha PLC producers and sells in electronic goods. There was a court case in progress as at 31st March 2021 relating to defective goods sold to a customer. Customer filed a case and there is a court case. As per the legal advice, the company made a provision of 50,000 in this respect as a closing date, but on 25/4/2021, the court ordered the company to pay 75,000 as compensation to the customer. And the directors of the company authorized the financial statements of 15th May 2021. So first they are asking as per the standard, this 75,000 court order can be adjusted or not. Yes, of course it is an adjusting event because this court order you are receiving the transaction that happened within the financial year and that court order date, the court order you received before you authorizing the financial statement. So which means the the criteria are ticked. So which means the case should be happen within the financial year and the court order have to be received before authorizing the financial statements, right? So you can adjust that. And the provision that you have to make is 75,000, right? So that is answer number B. 42, the following balances were available in Chaturika PLC asset opening and closing dates. The stated capital and retained earnings given, and the amount of resource capitalization they ask, and the amount of public issue of shares they asking, right? So retained earnings, opening and closing balances you have to record as it's given, and the stated capital also. And it says profit of the company for the year ending 31st March 2021 was 3,500,000. So this is profit after tax. So the profit that you generated from the income statement, you have to transfer to the retained earnings. So retained earnings credit by 3,500. And the company paid an interim dividend of 500. So when you are paying the interim dividend, that should deduct from the retained earnings. So retained earnings debit 500. Further, the company capitalized a part of retained earnings and also made a public share issue, right? So you have to find out the capitalized part from the retained earnings because you know the opening and closing balances, you know the profit, you know the dividend payment. So the missing information is the amount that you capitalize from retained earnings to the stated capital. So you capitalize 1,500. So retained earnings debit 1,500, stated capital credit 1,500. Then you can find out what is the amount that you uh, got from the public issue of shares. So that is 1 million well, right? 43, complete the following sentences. The relevance and faithful representation are the two fundamental qualitative characteristics. A liability is identified as the present obligation to transfer an economy, blah, blah. The measurement bases are broadly categorized as historical cost and the current value. D, an economic resource is identified, the right that has to potential to produce economic benefits. 44, they ask in the revenue and unearned revenue. So based on SLFRS 15, I think, yes, revenue. Suranga PLC sells machinery in the local market. The installation of these machinery is also carried out by this company and it is required a specialized knowledge. The selling price and the installation fee of these machines are 3,400,000. Company entered into a contract to sell and install 5 machines on 1st of March 2021. The company had delivered only 3 machines and completed the installation of 2 machines by the 31st March 2021. So the company received an advance of 11,000 for this contract as on the agreement date. So they are asking the revenue recognized for the ending 31st March 2021. So as at 31st March 2000, first of all, they agreed to sell and install 5 machines, but as at 31st March 2021, they only did 2 machines, right? So you have to identify revenue about that 2 machines, so only for that 2 machines. So machines 2 into 3,600,000 and installation 2 into 400, so 800,000. So 6,000,000 and 800,000 altogether. 6,800,000 you should identify as in your revenue. But you received as sales advance 11 million. From that 11 million, you identified here 6,800,000 as your revenue. So, which means the other portion is unearned revenue. This amount you should present in current liabilities, right? 45. Inventory turnover ratio, you have to find out cost of sales divided by average inventories, and the cost of sales is directly given here 420. And to find out average inventory, you have to add opening inventory and closing inventory and then divided by 2. So 80 plus 60 divided by 270. So 420 divided by 70, your inventory turnover ratio is 6 times. And if you know the inventory turnover ratio, it's very simple to find out inventory residence periods. How to find out 360 days divided by inventory turnover. So 360 divided by 6. So your inventory residence period is 60 days. 46. From these given information, they are asking the total manufacturing cost, total cost, and total fixed cost. So here the total prime cost, total manufacturing overheads, and total non-manufacturing overheads, and they given produce 10,000 units, and the variable cost per unit is 600. So identify these followings. So to find out total manufacturing cost, total prime cost is given directly 4,500, and total manufacturing overheads also given directly 3 million. So adding those two, your total manufacturing, total production cost is 7,500. And the total cost is total manufacturing, you found here 7,500. Then non-manufacturing overheads is 2 million. So both together 9,500,000 your total cost. But the case is you have to find the total fixed cost. So total cost include two things, total variable cost and total fixed cost. So your total cost we found from B 9,500, and the total variable cost is given. The variable cost per unit is 600. So simple, 600 into 10,000, 6,000. So 9,500 minus 6,000, your total fixed cost is 3,500,000, 3,500, right? For inventory valuation, the cost can be classified as product cost or period cost. Or in the other direction, it can be classified as direct and indirect also. The costs are classified as based on behavior, it's only variable and fixed cost. 48, they ask in the EOQ. So to find out EOQ, 2D divided by CH under square root. So yes, 200 units. Because the EOQ, these information all is given directly. Annual demand given, cost, the ordering cost is given, and annual holding cost you can find out by 800 into 20%. Right, 160. So altogether is given. So square root 40,000, which means 200 units. And order times, they are asking the annual total ordering cost. So order times, the annual demand is 3,200 and EOQ is 200. So which means you have to order 16 times to get that annual demand, right? So total ordering cost, you can find out order time 16 times we found here, and the cost per order is given here 1,000. So which means 16 to 2,000, 16,000. So that is your total ordering cost. 49, the company manufactures a single product and its a contribution per unit is 50, and the following information is given below. Here, it's given the two different levels of the units produced. So if you produce 4,000, total cost per unit is 100. If you produce 6,000, total cost per unit is 80. So you have to find out first the total cost, right? So 4,000 into 100, 400,000. 6,000 into 80, 480,000. So this total cost include two types of cost, which mean variable cost and fixed cost. So when the production is increasing, the fixed cost is constant. It's not changed, it's fixed. The change cost is what? Variable cost. So you can find out unit variable cost by deducting by getting the difference of the total cost here 80,000, you can divide by the difference of units. Then you can find out unit variable cost, right? So if you found the unit variable cost 40, then you can extract this 40 into 4,000 level or 6,000 level. It doesn't matter. දෙකේම answer එක වෙන්න ඕනේ same. So at 4,000 quantity total cost we found 400,000 and the total variable cost is you found here unit variable cost is 40. So 40 into 4,000 quantity. So your total variable cost is 160,000. Then your total fixed cost is 240,000. And the selling price per unit because it's the contribution is given here. So how to find out the contribution? Contribution is equal selling price minus variable cost. So if they are asking the selling price, so which means you have to add contribution and variable cost together. So your contribution is 50, variable cost is 40. So altogether your selling price per unit is 90. Last one, they are asking the total initial cash outflow, cash inflow of year 8, which means the asset closing date, closing year, and annual operating profit for year 1, and the sunk cost. So your sunk cost is that project report, 150,000. Oh no, sorry, 60,000 project report. That is your sunk cost. So sunk cost means it's already done. You already paid that amount. You can't recover back that. So that is your sunk cost. Initial cash outflow, the purchasing price of this machine is 5,500,000 and the working capital as in opening year as at initial date is 150,000. So altogether your total initial cash outflow is 5,650,000. So total cash inflow of the year 8, so which means as in closing year, your annual savings given 800,000 and they are saying that working capital that you invested as in initial date is recovering at the end of the investment. So that is an inflow at the end of the year, 150,000 and the disposal value given 700,000. So altogether 1,650,000. And then they ask in the annual profit. So the differences between profit and the cash flow is what? Depreciation. So when you are preparing cash flow, you do not consider the depreciation, but when you are preparing uh, profit, you do consider depreciation. So the cash flow given annual cash flow 800,000 and the depreciation is 600,000. So deducting the depreciation, you can find out your profit 200,000. So yes, that is end for the 2021 A-level first paper discussion. So it's bit long one, it's a bit lazy though, but you have to stay with this. So my advice is first do the paper by yourself and do the corrections and then find out where did you do the error from this discussion, right? So do share with your friends and please stay with the other explanations, discussions as well. Thank you.